Hello everyone. Today our team composed of Viridiana Cabrera, Valeria Lopez, Violeta Sanchez, and myself, Ana Maria Gonzalez, will present the investment project evaluation for Bissú Cosmetics. This analysis aims to determine the financial and strategic feasibility of Bissú's expansion into the skincare market, which happens to be one of the fastest growing segments in the beauty industry. Throughout this presentation, we will explain the company background, our project objectives, the financial assumptions, and the results obtained in the normal, optimistic, and pessimistic scenarios.
Bissú is a Mexican cosmetics brand widely recognized for offering high quality, affordable, and currently free makeup. Since its creation, the company has focused on making beauty accessible without sacrificing quality. Its main strengths include strong color pigmentation, modern trends, and ethical manufacturing. Bissú has successfully established a solid presence in the Mexican market through distribution in beauty supply stores, retail partners, and online platforms. Its appeal lies especially among young consumers thanks to its modern aesthetic and variety of products. Now, with a growing interest in skincare and self care production, Bissú aims to expand its market reach beyond makeup, positioning itself as a comprehensive beauty brand.
The main objective of this investment project is to increase production of capacity and also enter into the skincare market, generating a long term sustainable growth for the brand. And this project will allow Bisou to compete with both local and international companies. And by doing this, Bisou would not only diversify their portfolio but also capitalize on its established reputation.
The financial model is based on several key assumptions derived from market trends and Visu's current production capacity. The installed capacity is 3 million units. The capacity utilization is expected to reach 85%. The annual inflation rate is estimated at 5%, and the sales growth is projected to be around 10% per year. These assumptions reflect a realistic projection of the company's operating environment and its potential to scale production without compromising quality. In addition, the WACC used for discounting cash flows is 18.24%, which serves as our required rate of return to determine the project's financial viability.
In this slide, we can see the consolidated indicators table, which summarizes the financial results from all three scenarios. This table helps us understand the overall behavior of the project by looking at the average NPV, year, payback, and other key indicators. It gives us a complete picture of the project's profitability, risk, and growth potential. Let's begin with the normal scenario, which represents the most realistic outcome based on the current market conditions. First, we have the NPV, which is 636,790 pesos and 19 cents. This positive NPV indicates that the project is adding financial value to the company. Then we have the internal rate of return, which is 23.49%. This is well above the WACC of 18.24%, confirming that Visu's skincare expansion would generate returns above the cost of capital. Then we have the modified internal rate of return, which is 21.41%. This further validates profitability even after accounting for reinvestment assumptions. The payback period is 3.18 years, which means the company would recover its initial investment quickly within a short time frame. The discounted payback period is 4.47 years, which means that once it's discounted at the WACC, the investment recovery is slightly longer but still within the project's useful time. And lastly, the profitability index is 1.14, which means that every peso that is being invested generates an additional 14 cents of value. In summary, under the normal scenario, Bissú's project is financially viable, profitable, and stable.
Now, under the optimistic A scenario, the financial indicators are even more encouraging. Our NPV result are 1,659,557.92. The positive NPV confirms that the project creates significant value, generating a return well above the company's required rate. These demonstrate a strong financial feasibility and long term profitability under optimistic conditions. These results confirm a strong value creation, showing the project performs excellently under favorable conditions. The results of payback period are 3.22 years. That means that the projects achieve investment recovery 3 years, indicating a fast capital recovery and efficient use of resources. And of course, our result of the discounted payback is 4.20 years. That means that after applying the WACC of 18.4%, the investment is fully recovered in approximately 4.2 years. This remains within an acceptable range for expansion projects in the beauty and skincare industry. And the results of our internal rate of return were 25.90%. This means that the year is well above the WACC, confirming that the project's profitability exceeds its financing cost. This demonstrates the project's strong return potential and resilience under optimistic market conditions. For our modified internal rate of return, the results were 21.26%. This means that the mere reinforced the project's solid financial performance, reflecting the sustainable reinvestment of return of the company cost capital. And of course, for our profitability index, the results were 1.10. That means that since the profitability index is greater than 1, the project generates zero point 0.10 centavos of additional value for every peso invested. This confirms that the expansion will create positive financial value and strengthen Bissú potential in the skincare market.
Finally, we will analyze the pessimistic scenario in which assumes a more conservative conditions such as lower demands and higher costs, and we got a total of an NPV of 118,645.41. And although it's slightly negative, this shows that the project is very close to break even with a minor inconvenience in pricing or cost efficiency. The NPV could turn positive. In payback period, we got a total of 5.31 years. Despite the lower recovery, the project still maintains a cash flow stability. To continue, we have the discounted payback of 5.11 years, and this reflects the project capacity to maintain positive cash and also to approach break even in cautious market conditions. We got a year total of 17.93%. That is near the WACC, and this means that the project almost meets the company minimum required return.
The MIR is 17.03%, which shows that the project maintains a stable reinvestment capacity, meaning that even with conservative cash flows, it still delivers consistent performance close to the company's cost of capital. Here we also have the profitability index, which is 0.97. Since this value is very close to 1, it means that each peso that is being invested almost fully recovers its value. This tells us that the project is right on the edge of profitability, and with a small improvement on efficiency or on stronger demand, it could easily turn positive. Even in this conservative scenario, the result suggests that the project is financially resilient and adaptable, capable of maintaining equilibrium with small operational improvements.
By comparing all three scenarios, we can observe that the project maintains a consistent and balanced financial profile. In the optimistic case, profitability increases significantly with high returns and a faster payback. The normal case shows steady performance and a good balance between profitability and risk. In the pessimistic case, the project remains near breakeven, proving that Visu's financial model is robust and stable even under conservative assumptions. This comparative analysis demonstrates that the investment maintains low downside risk and strong upside potential.
Once the results are all consolidated, the project exhibits excellent financial performance. The average NPV is 614,767 pesos and 19 cents. The average internal rate of return is 23.24%, and the average payback period is approximately 3.3 years. This analysis confirms strong profitability with consistent value creation, quick capital recovery ensuring liquidity, manageable risk exposure even under conservative scenarios, high growth potential under optimistic conditions where the NPV surpasses 2.2 million and the year reaches 36%, and also strategic alignment as the project supports Bissú's long-term vision and expansion goals. Overall, the skincare expansion project is financially sound, sustainable, and highly recommendable.
To conclude, our evaluation confirms that Visu's skincare expansion is a profitable and strategic investment. With an average NPV of 848,000 pesos, an year of 24%, and a profitability index of 1.20, the project clearly creates value. The payback period of around 4 years make it financially attractive for the beauty industry. This investment will allow Bissú to diversify its portfolio, increase competitiveness, and secure long-term growth. However, we recommend strengthening the project through deeper sensitivity analysis of price, cost, and ramp up, improve working capital management, clear cost structure as fixed versus variable for more accurate forecasting, and if implemented gradually and monitored with strong financial discipline, this project has high potential for success and long-term profitability.
To wrap up, our analysis demonstrates that Visu's entry into the skincare market is not only feasible but also strategically aligned with the brand's evolution. With the right execution, the company can achieve financial success, market expansion, and sustained growth in one of the most promising segments of the beauty industry. Thank you very much for your attention.